We've officially crossed the point of no return. Bitcoin just triggered a documented bear market breakdown for a new lower low that mirrors the most brutal crashes in crypto history. And the data is showing that we are staring down a potential 50% puke from here that could send Bitcoin back to $34,000 on a cycle floor. And if this happens, then it may very well take XRP back to 70 cents or lower. However, it seems that a bull trap has formed that could also potentially still have a shot at breaking out for the $80,000 level first, or continue trading to the downside just like it has in history, which will catch every over-leveraged retail trader off guard. And this will be an inflationary trigger that threatens to send volatility through the roof for the crypto markets as we head into March 11th, which will give us a CPI reading and potentially stickier inflation alongside the oil crisis through the Strait of Hormuz and the war in Iran, leading to a greater sell-off in the macro market and carrying over into the crypto market. In layman's terms, the biggest investors likely do not want to invest in this environment, so they will sell their risk on assets like stocks and crypto to protect against further downside. Now, last week was quite interesting because the crypto market was negatively correlated to the S&P 500. While stocks were dumping, crypto was actually up. And I'm going to reveal in this video the exact RSI convergence, proving sellers are exhausted, which is what led to this potential bull trap. And I'll be covering how you can apply the 4 horsemen setup I'm using to front run the next 200 days of this volatile market. So stick around because I'm breaking down the specific price levels and where I'm flipping my bias to hunt for a high probability short that could make your entire year extremely profitable. Now, before we dive into the charts, if you want to stop guessing and start earning, then our accelerator program at Altcoin Pro teaches you how to apply the SGS blueprint. It's designed to help you put your stable coins and whatever crypto you're currently holding to work for you in any market environment to earn anywhere between 20 to 200% APR with professional level safety in mind. And we explain exactly how this works on the other side. So be sure to click on that link down in the description below for accelerator.altcoinpro.com. Watch this video and apply today. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Again, I don't know if the market needs more time, but I'm starting to see signs of strength, which is quite exciting. At least if you're long or you've been sitting in a position that's underwater waiting for a retrace, which by the way, I never recommend. The moment you are, if you're, especially if you're swing trading or with leverage at all, trading with leverage at all, I highly recommend that the moment you're wrong, within a reasonable range, you know, upwards of 10% on a position, just take your loss, cut your losses. Again, the best of the best, they're quick to cut their losses, and they're slow to take their profit. More often than not, they let their winners ride. Now, that said, I wouldn't let a winner ride if I'm trading counter trend. Does that make sense? So if the trend is down, okay, and I'm like, I need to, you know, this is my philosophy now. I'm going to adopt it. When I'm in profit, I got to let my winner ride. That is not a good play. You want to be letting your winners ride when you're trading with the trend, when you're swimming with the current. And the current currently is still down. Okay, we have officially started what I would be confirming as a bear market. Now, that said, bear markets more often than not, when you study centuries of market data outside of just crypto, last a lot less long than bull markets. Bull markets last far longer. So that said, could this be a very short-lived bear market? Sure. Whether someone on CNBC titles it a crypto bear market, I couldn't care less. The way that I define a bear market is when the trend has officially broken down. And so, you know, the way that we would look at it is pretty straightforward. If I just take this chart right here on Bitcoin, and we're going to look at Bitcoin I've covered this in the past. If you're new, just as a quick side note and explainer, Bitcoin is kind of it's the same that I would consider your index. Your index is going to be your S&P 500 or your NASDAQ. You would want to look at that for market strength, and then track your crypto or altcoin against the overall market. Now, the reason I say that is because Bitcoin is the largest crypto by market cap and by just a long shot. I mean, we're talking it is so much bigger than any altcoin that you're typically looking at in terms of market size and liquidity, that it would be foolish for you to ignore it. And if you do, you're just not going to have a whole picture into the market when you make your decisions. So making decisions without looking at Bitcoin first is probably pretty foolish. That said, it doesn't mean you can't be right. It just means that you're constantly trading with a blindfold on. If you want to learn how to track a trend, it's pretty straightforward. Now, I've taught this in Technical Analysis Essentials. Highly recommend you go over that video, and don't skip videos, right? Like, it's very important that you learn how to use TradingView. But one of the four horsemen that I cover that is extremely crucial to your development as a trader and an investor, even over the long term, when should you buy or start investing, is by looking at the trend. Okay. And you can buy into the lower portions of trend all the time if you just learn this one skill. So that said, man, that should be a headline, right, for some sort of an ad. I'm going to toss it on a weekly time frame. Okay. And so if I just let's just say I'm trying to figure out what's the trend currently. Are we down or are we up? Notice how I put it on a line chart just to make my life easier. Many of you are very used to your area charts. You look at these and say, on your Coinbase account, very simply, which, by the way, if you're on the simple version of Coinbase and not on Coinbase Pro or One or whatever, and it's like it's going to charge you a ton of fees when you're looking at a chart like this and you go from 1 day to 1 week to 30 days, and then you make a swap, you're getting cooked. You're absolutely overspending on fees, which means you do need to use a better version of their, pro account and features. Just look that up on ChatGPT or Google and you'll figure that out, but highly recommend you do, especially if you're looking at these charts. So that said, this is typically what people see. Okay, and obviously I'm zoomed out quite a bit. And I'm just going to take one of the tools that I teach you in those courses and put it right there. Now, why did I put it there? Because that was the actual cycle top in November of 2021. I'm going to go ahead and take another yellow line, okay? And I'm just going to drag it and put it on the current cycle high. That is the highest high we've seen. So these are the two highest highs of two different cycles and markets. One would argue if we reached about 65,000 on a weekly time frame, okay, a 69,000 top in terms of a wick for the week, then that was the actual cycle high. Because when you actually do the percentage down from there to the actual bottom over here, it is 16,000. Okay, that's 75% dump. Now you'll notice for whatever reason, we have a cycle high here on the line chart of 65 and a low of 16-ish. When in reality, when you go to the daily time frame, we'll go ahead and do that and zoom in. You can see that that's not actually perfect and that's not what occurred, right? And so all these lines are doing is basically putting a point of data wherever the daily close was, because I'm on the daily time frame. On a weekly time frame, right, we didn't actually close here at $67,000. And again, we're not getting the wick, we're not getting all of the data, which is why I actually like using candles. Okay, whether you use bars or candles. Old school traders love bars. I personally prefer candles. They just look better. But you'll notice right here, and right, I'm just dragging this a little further. And so it is slightly different. Now we're down to 15.7 on the daily and 67 on the high. This is 76% down. Anyone in there, that isn't completely lying to themselves would tell you that's a pretty nasty dump and a drop. And that is arguably what bear markets do, right? You lose a lot of money if you're sitting on an asset spot holding and waiting for the price to go up. And so you see, that is the trap. Most people treat their Bitcoin or XRP like rental property that they leave empty for years. Because if a scenario like this occurs again, and it seems we're almost exactly at this point in history in June of 2022 before the markets break down for a further low, where the market actually took over 300 days to not only bottom out by dumping another 47% lower, but this means that they waited 300 days just to get back to break even if an investor had invested here. This is like having that rental property that is empty or vacant. This is how crypto investors treat their portfolios. It's like they're hoping their neighborhood gets better so they can eventually sell it one day. But if you're sitting on 5 or 6 figures of crypto and it isn't paying you your monthly rent, you aren't an investor, you're just a hopeful holder. And so inside of our accelerator program, we stop focusing on the win moon and start focusing on the Airbnb of crypto. We use liquidity pools, shared vaults where traders pay you a fee every time they swap, which is actually really safe in most scenarios. Instead of those fees going to a massive exchange like Coinbase, they actually go to the landlords, the people that hold the liquidity, that are holding those bags. And so although this spreadsheet looks slightly complex, it's actually quite simple when you apply the things that we teach inside of the accelerator program with our help. Right now, if you're sitting on XRP or the stable coin, you can earn upwards of 51% in this pool. And so if a pool is doing $5 million of daily volume and you've got, let's just say, a $60,000 stake, you could be looking at $40 to $70 a day in passive fees. That's $1,200 to $2,000 per month in rent while you're still holding the same assets. So if the price pumps, you win. If it goes sideways, you're still collecting the paychecks. It's the ultimate hedge against the very bear market that we're seeing right now. And so we went ahead and put together a full passive income blueprint specifically for you if you're $50,000 or more into the crypto market, whether it's stable coins, XRP, or any other crypto, and you're tired of your wallet doing nothing while we range or break down. So if you're ready to become a crypto landlord, click on the link below this video and let's get your assets to work for you. Now let's get back into it. In order to simply break even, you would have needed to see Bitcoin retrace, or better yet, turn around and for a new bull market and put in another 329%. Okay, if you lose 75%-ish, you need a 300+% gain in order to break even. How long did it take for you to break even? And this is why it's so important to learn the basics of technical analysis so you're not stuck in these types of things. 839 days. That's quite a while. Okay, not knowing if this would have occurred. Now, it's easy for us in hindsight to say, well, I'll just wait it out because it always happened. It always goes back to something. But in reality, it could have been 2 times as long as that, 3 times as long as that. It could have never gone back there again. And I really want everyone on this call to maintain that perspective, that at the end of the day, the market doesn't have to do anything it's done in the past. Every day is a new day. Okay. And markets are far less consistent than the sun rising tomorrow. So that said, just because it has in the past doesn't mean it will again. Now, I already covered this in a prior call, but also just because, right, in the past, when we broke out for new all-time highs, for example, here's was a prior all-time high in 2017, December of like $20,000. Okay. Notice how when we broke out to a new all-time high, in the past, we never actually retraced in a bear market back down to that prior high. Notice right here, this is the bear market low after 2018, 2019. Notice how this low never came and retouched or retested the prior all-time high of 1200 from 2013. In the same manner, people were expecting, myself included, oh, it's not going to dump right back down to 19,000. It's never done that. We're very close to a bottom at 26.25, while the thing puked another $10,000. And if you were levered, you got screwed. You messed up because you assumed the market's done something in the past, so it has to do it in the future. Okay. But assumptions will kill you. in markets over the long run. Okay. It doesn't mean that they can't play out your way sometimes. The problem is we begin to think we're too smart. Oh, see, I got it right last time. I'll do it again. And one of the most dangerous trades you can take is when you don't have a game plan and you make assumptions, you make a stupid trade, but it still turns out in your favor and you make money because then it builds in arrogance. And guess what? Markets will eat your arrogance alive eventually. They will eat away your entire portfolio and humble you real quick. If you don't humble yourself, the markets will. So that said, I'm just dragging and drawing. And by the way, that's just me teaching you, I guess some philosophy around markets, which have served me arguably better than learning the basics of technical analysis when I really think about it. But notice how I'm just going to circle these highs here. So this is our high of the 2017 high and top, and here is the high of the current market environment. So how do I know this is a bear market? Okay, pretty straightforward. Now, people might argue that all day long. I don't care to argue it. This is just what the charts are showing me. Okay, this is cold hard data. That's all I'm looking at. And so I'm first going to circle the all-time high of 2025, circle the all-time high of 2021, circle the all-time high of 2017, 2018, call it good. Now, between these 2 points, I'm just going to go and find the lowest low in that range. Okay, so now I'm going to circle these. Let me go ahead and drag that, and I'm actually going to change the color. This low is the lowest low, okay, between these two highs. There's no lower low than that. Okay, so when we talk about trends, extremely important that you think about it from the perspective that I teach, that an uptrend is a series of higher highs and higher lows, right? HHHL, okay? Higher high, higher low. A downtrend is a series of lower highs and lower lows. In other words, LH LL. If you write that down and put it somewhere, you always look at it and you actually continue to look at a chart, you'll start to develop the bone and the skill to like see trends everywhere. Okay, you'll see it. Before you even touch, a chart, you'll see it. And then over time, it's like, oh, this is really going to help me. Am I counter trend trading? Should I sit in a profit longer? Or am I trading with the trend, right? In that case, actually sit with the profit longer. Um, Now that said, right here, right, this is our lowest low between these two highs. So let me go ahead actually and change the color first. Let's change that to like yellow so you can see. And I'm going to do the exact same thing between these two highs. Where's the lowest low? Right here, right? Not, and I'm not actually circling this bottom. I didn't circle the bottom. I'm just showing you this area and range is the lowest low. Okay, so we're not being perfectionists here. If you really want to be a perfectionist, you can do it yourself. It's pretty obvious, right? It's right here. So that said, now we know that this has been a long-term uptrend. I mean, we're going back, in this case, decade, right? Over a decade now of data. Well, we'll do the math, about 2.5 decades of data on Bitcoin, where this thing has been in a long-term uptrend. So my bet is that we're probably in the next cycle going to get an all-time high. Now, if we talk about a shorter term or time frame, maybe a 4 year cycle after this bottom, okay, so we know where the bottom is, we know where the all-time high is currently, okay? How do I know that the trend is officially done? Well, because I'm going to circle all of the major points. I'm going to zoom out again, and I'm going to circle all of the major points between these two ranges right here, okay? We don't need to be perfect. We just want to kind of get it right, okay? So let me go ahead and do that right now, and let's change the color again. So this is our low. Where's the high after this, okay? Right around here. We have like a double top. Do you see that 1 and 2? Okay, let me go ahead and change the color of this so you can see now that I've just circled. Let's just make it orange. Nah, let's make it pink. That's too close to the other one. Purple. I don't know, guys. I'm trying to make it easy to see. Okay, cool. So now that's our double top. Okay. Now we have a higher high than the prior high here, but I'm just focused on the new trend now because we already have all this data. So we don't need to worry about all the stuff in the past. I'm focusing on this cycle. Okay. Where was our low? Where was our next high, I should say, to make things even easier before I go for the low between. Okay. Our next high of the range really was like right here. Okay, to about this was actually a new all-time high of $74,000 for Bitcoin before it broke below the prior range high. So you'll notice I have my two highs circled right here. The lowest low between these ranges is like right here. Okay, so this is a current uptrend. Pretty obvious, right? Now, next low, right? next high. Why? Simple. Because if I looked for the next highest high, where's the lowest low? Perfect. Is this low higher than this low? Yes. This high higher than this high? Yes. So on and so forth. Okay, now we've got our all-time high. And so between these two highs, where's our low? Right here. Interesting. Where should we have supported or double bottomed if this was going to be, and I'll even get a straighter line, a continuation in the trend right here at 77-ish thousand on the weekly, or better yet, let's actually go back to what we're really looking at. It's still 77,000, which is awesome, or even 74,000. So I'll put a box right there between these ranges. Okay. And so right here, you'll see that we've officially started a new trend. If we had supported here for a double bottom, we still have a higher high. It's possible, right, that this thing could have broke into this range and then built a base and then trended to the upside for a new all-time high. That would be considered a bull market still. However, when I start to see pattern, it starts to roll over. You see the price rolling over, struggling to break for new highs at 104, 105. Not, it couldn't even get back above 100. Usually you'll see something that looks more like a head and shoulders, right? Here's your shoulder, here's your head, here's your next shoulder, maybe a little bit weaker, 104. Then it breaks back down to the neckline of 74. You have a perfect little head and shoulders. But if this was a head and shoulders, guys, let's just drag this a little further up. You can see, let me remove even the drawings now, okay? And we'll grab this tool right here. You can see that this shoulder was extremely weak. You see how truncated this move is? How like it was almost cut off at the knees. It didn't have even a chance for real gains. And the moment that we actually, zoom in out of that daily time frame, broke for a new range high here, it was immediately sold off. Okay, for a bull trap, something I've covered in a prior video. This is your indicator that this market's ready to puke, right? The market's giving you signs that it's sick. It doesn't want to be up here in this range. It actually wants to go lower. No, why that's the case, I don't know. Why everything's occurred the way it has, I don't know. Everyone's got a theory, everyone's got a prediction. I know that, we make YouTube videos, and I know that there's probably a lot of conspiracy around Jane Street, shorting the crap out of the market and trading. But you know what? If you focus less on that and just focus on the price, I already knew this was coming. And it's not like I'm any more brilliant than the next guy. I promise you. It's just that when you look at a chart enough and learn the basics and the skill set, the fundamental, the groundwork, the framework of the four horsemen of technical analysis, you'll see it. And so now that we're below this low right here, this is officially a new downtrend. So what I'm going to do, okay, pretty straightforward, is circle the all-time high. I'm going to circle the next high. And between these two highs, do we have a low? Yes. After this high, do we have an actual bottom? Yeah, actually, we kind of do. We have 1, 2, and 3. Okay, it's like a triple bottom, if you will. Maybe even a double bottom if you're not looking at the daily, candlesticks, but you're looking at a line chart. You'll see this is a nice little, double bottom at 64. So let's go back. Let's go to the candles. And so in reality, if we were, oops, let me go ahead and grab this. If we were to retrace to the upside, like from 67 and come right back up to, let's say, 83, 84, would this not technically still be a downtrend? The answer is yes. So this is where I start to, even if we retrace up to here, I'm not actually uber bullish. I might be bullish in the short term, in the interim, but the trend, this is our first actual breakdown. Okay. Now, if we look at history, okay, and I don't use history as the sole indicator, it happened very similarly here. Do you see this? Okay. Let's focus on the highs. All-time high, new all-time high. Okay, very weak all-time high, by the way. We barely broke for a new high and then immediately retraced. I don't like to see those types of breakouts. That's an indicator that there's no real strength behind the move. And then when you confirm it with volume, it really helps. But between these two highs, right, we have our low right here. Let's go ahead and just grab a box and drag it right there. That's our low between those two highs. Okay, then we had more lows right here. And notice how it's very similar. Okay, these lows are struggling. Notice how weak the rally is right here. Notice how if this was kind of like, I wouldn't even consider this a head and shoulders, more like a double top, right? Maybe a double bottom. But you'll notice how we failed to hold a new higher low and then puked to a low right here. Notice how we just dumped. This was a very weak breakdown below the prior range lows between the two highs. Guess what? Even more downside. And that lasted, okay, once the breakdown occurred, if you really come from this range right here on the very first day up until the bottom, let's just look at that analysis. This is the actual bottom right here, another 197 days. Now, just play that over what we're currently seeing. Are you guys beginning to see it? Prior high, okay? Doesn't have to be perfect, doesn't have to be as close to the prior high. Just look at high, new all-time high, breakdown supported just above the prior range lows. It's almost like exactly the same, which is weird. We failed to hold this range here, broke for a new low, and the moment we broke down, okay, if we were to assume it's going to look something similar to that, another 199, 200 days puts us somewhere into August. Okay. Um, will that occur? Probably not. Realistically, not. But it's shockingly similar in this scenario. And then what's even more interesting is we also had, and this is what I want you guys to look out for. Let's remove all of those drawings, okay? Are you starting to see the same pattern here? Very weak rally to the upside, dumps for new lows. This right here was your official start to that bear market, or at least you could confirm this is a bear market. Now, the problem with crypto is the fact that it is so freaking volatile. Okay, other markets, they're easier to tell. They have smaller ranges because they're more liquid. Okay, they're regulated. Bitcoin in this cycle was not regulated. Even in the current cycle, there just wasn't enough money from institutional players to really make it, not as volatile, if you will. But it's getting there, and I think it will be more there this next cycle. You'll notice that for us to even know if this was a bear market was realistically a 53% drop to begin with. That's massive. In other markets, you're talking, 20%, 15%, 30% in those ranges, just depending on the size of the market. And you would know this thing is kind of like, in a bear market. So other fundamental guys will be like, well, no, that's two negative quarters of GDP, right? And it's like, who cares? That stuff is too lagging. It's way too lagging. I don't like waiting for lagging data. I like the market because the market gives me leading data. More often than not, by the time we've actually bottomed in terms of, the economy and economists talking about all the different indicators you can look at, the market's already bottomed been well into their bottom and has started to retrace and start a new bull market trend. While everyone's screaming bear market, right? We're already at the start of a new phase. So that's what you really want to watch out for. And that's why I actually do like cryptos because I believe it's a leading indicator. It usually trades ahead of the rest of the market, including the stock market, which means we're likely in for some new lower lows. Now, what's going to occur soon? I'm not sure, but here's what I know. We're in this phase right here where we're a few weeks in, okay? And you'll notice that Bitcoin, okay, in this scenario, let's replay it to like right here. You'll notice, well, let's even do it before then, like right here, right? Bitcoin was trading in this range where it was seeing support right here at like 28 to 27,800 okay, so 28.8 to 27.8 in that range we saw quite a bit of support. Okay, you'll notice that volume really started to decline into the range here, right? Major sell-off in capitulation, volume increase, then into the range where it's building a base, it starts to decrease. Totally normal, natural, fine. Market just cooled off. Then you'll see that over a period of a few days, Bitcoin really rallied hard and broke for a new range high right here at $31,000. Not something that you should be afraid of. If anything, I would have bought that too. So totally fine, normal, natural. Okay. Now, many would argue, well, this, everyone's got their opinion. I don't care to have an opinion. I'd rather just look at the chart. The chart is saying, this thing has bottomed out. It looks like it could potentially retrace back up to 36 in that range up here. Okay. Might as well take the trade. Honestly, All you need to do, just take the trade. Where should you have a stop loss? Okay. Arguably, in these types of scenarios, pretty straightforward, right? If the market breaks that back down below this range right here, which was a resistance, this is officially a breakout for a new local high. So when you see that type of a play, if the market is really weak, it'll break right back down. Now, whenever I see a lot of price action trading like this at 30,600, I would probably just set one at like not an even number of 30,000. I'd set it somewhere down here at like 29.9 or 29.899 or whatever. So imagine if you did set your stop loss there on your entry. So that's your day. Okay, you enter there and your stop loss is like right here. That's a 6% loss to take a 10% position, 15% position. Like you're not losing money to be wrong there. And you're protecting a lot of capital. And if the market continues to trade in your direction on the next day or the third day, add to the position, okay, and then sit on your hands. But remember, you don't want to sit too long because you're counter trend trading here. So you're trading against the trend. The trend is officially down. We know this now. You're in a bear market. So I wouldn't take the position forever. And this is kind of the environment that we're currently in. We're seeing the exact same signs and signals. So right here, you take that trade. It's not that big of a deal. Okay, you lose 6% if you're wrong. Let's go ahead and leave that on. And we know what happened now. Notice how right here you're still in your position, you're still in profit. If you want to add a little, sure, but you're adding risk. You haven't really broke for range highs. You're not really in profit here. I don't tend to add unless I'm actually a little bit in profit. This is not in profit. You're kind of still at break even. Okay, just as a side note. And you'll notice that right there your stop was hit and you're out. And then you know what you do? You just wait to see what occurs at 28, or you wait for it to come back to 31 before starting to take another bullish trade. Guys, like you could do this all day. What really it requires is patience and discipline. And I talk about this all the time. But right there, you already had your stop hit. You'll notice that volume did increase into the breakout. Nothing bad with that. But here's the thing, right? This was not a good breakout. The market's just not ready yet. Does it mean that it also couldn't have just come down into the 28, started bouncing, ranging for another month or two, and then come back to 31? Yes, it could have. And so that could have been your bear market bottom, but the market wasn't ready yet. And because we don't know, we got to play these ranges right. So let's play it out, right? And we see, look at again, notice volume really declining here. One last time, really try to get into that range. I wouldn't take it now unless we started getting back and closing at the 31, noticing that these guys are right here. Realistically, this is kind of where I'm playing now. Okay, just as a side note, this is a good little I would say example of that. If I saw that my actual highs and closes, better yet the closes occurred right here at 31.7, that's where I'm actually going to place a trade now. I'm not going to take it right here. Okay, and let's just go ahead. Okay, not a bad candle. I like the dip being bought back up. Okay, still not buying. And now we're back in the range, and here's where we start to see the market really, crumble. So right around here, in my opinion, the difference between taking a counter trend trade here to the upside versus taking a with the trend trade here is I actually would place a short right there. Okay, I saw volume pick up pretty good right into this bar right here, but then weaker volume all the way back to a range low, which basically indicates that buyers are not buying at all through this range, which is why it required less and less volume or sellers to get back to this range low at 28. In other words, there's just less confidence among buyers that this thing, okay, is ready to go. And so placing a short here is a better trade because you're trading with the trend. Okay. So now guess what? You took a long here, you got cooked, you wait a week or two, breaks back down, taking a trade with the trend, expanded volume to the downside. This is your first major low here after quite a while. Why not? Okay. And you would have made a lot of money playing that move. I mean, look at how it puked. Do you see that? Like this would have made you rich right here. This would have made you even more so. Okay. And once you start to see, markets really struggling to support another move like this, more often than not, I'm taking profit on this guy and then throughout. Okay. I don't care between 18 to 15 if it goes there. If an extra $3,000 move on this is going to make me a few extra pennies. Like to me, not the first major puke. I usually wait to see a little bit of a move to the upside, and then it usually continues dumping hard. And especially when you see, look at the expanded volume on the breakdown. Okay. So right around here is where I start to take profit. And if it continues, I just keep taking profit along the way. Or better yet, closing my short positions, right? Covering my shorts, if is what they call it. So that said, you'll notice also, look, right, we're starting to see a bit more strength on the candles and the bodies right here. Okay, so this is like, we're getting close to an actual bottom here. So this is kind of what we're seeing here, which means that something like this can occur again. We could see another little bull trap. Let me X this out. And I do believe that we are oversold. Okay, there's quite a few indicators, but notice right here, very similar. Let's go ahead and take this little box tool, right there. Call it good. We can even bring it up a little there. Okay, good enough. Breakdown, expanded volume to the downside, new lows, very similar to the price. I mean, it's weird. It's like, do are markets like this? Are market makers? Do people not look at charts? I think most people actually don't know how to look at charts. But more than that, is it just that human nature and the way that people approach markets hasn't changed at all to the point where it's not necessarily any one market maker or player that's doing this? It's just the masses. And the chart is just showing you what the majority of money is doing all the time, which is quite interesting. But you'll notice that we are starting to build a base here, and I do like the price action here. Okay, we hit a double bottom and a low, triple bottom right here. Volume is pretty consistently just above average in these ranges right here. I would like to see, okay, Bitcoin break back above the $70,000 level. But here's what I'm starting to see, okay? Right here, retested the low. Major bullish engulfing candle, huge wick to the upside, retraced right back down to the low, immediately bought back up. Now we have what I would consider a new higher low. Yes, the wick is there, but even without the wick, do you see it? Consistently being supported right here at around 65 now instead of down here. We're not trading in this range here. This is the moment we're breaking down into the range, right? There's typically limit orders or people that are watching their computer buying it at 62 to 63, immediately pushing the price right back up on the day into about $65,000 where we're closing. So we're closing consistently higher. One major bullish engulfing candle, a second major bullish engulfing candle. We're struggling to break for a new high, but notice even when we sell off yesterday, okay, down to $66,000, immediately bought back up for a inside candle. So even if over the next few days we retrace back to 66, in similar fashion to what we did right around here, I'm willing to bet we're likely ready to start to at least get back up to $70,000. Watch it closely, maybe take a position here, but have a tighter stop because you're trading counter trend and because these are very similar signs to what we've seen in past market cycles. I am liking our strong base right here. So if I remove all of those drawings, pretty straightforward and easy to see, right? We have a pretty nice base that we're building out right here. I like to call it a rectangle base. It's pretty straightforward. It literally looks like a rectangle, and we're trading in that range. So taking a trade here won't be bad either to the upside or the downside. I'd be more cautious on the upside than I am on the downside. But it is important to also note that well, there's a couple things we can look at. Okay. So if you're talking trading to the upside, we're going to look at a few different indicators. And here's why I like doing this. Okay. When you guys are learning about RSI, a lot of you look at it. You'll notice that on a daily time frame, we were pretty deeply oversold right here. And that is true. And again, I don't love using the term oversold because I think it messes with people's heads and how they approach and think about markets. But at the end of the day, this thing had sold off heavily to the point where on a daily time frame we put in a low of about 15.6. Okay, if you look throughout history at Bitcoin, the last time we did that was actually in November of 2018. So it's been quite a while. Actually, and then one more time here in March of 2020 during COVID. So there were two situations where it actually occurred like that. Okay, bottom in March of 2020 and bottom in 2018 November. Now, if we look at those days, and this is why you've got to be cautious, just because these were bottoms does not mean this is the bottom. If anything, the market looks a lot different than it did back then. So I am not going to apply the same thought process. I am looking for patterns. I am trying to make sense out of an irrational market. Okay. But at the end of the day, just because I see this pattern doesn't mean we've bottomed. In this case, you'll notice we hadn't bottomed and we actually continued dumping for lows. In the case of March of 2020, right here, oops, I wasn't perfectly on, you'll notice that we essentially bottomed. So, because of that, I'm not going to go and look at it and say, now we've bottomed for sure. Reality is, in both of these, especially in this scenario, right? Excuse me, especially in this scenario, this was just a black swan event, right? Where completely out of the norm. I actually don't think we would have seen a dump from like 9,000 to like $4,000, 3,800 on many exchanges at all. And matter of fact, I think Bitcoin would have traded somewhere in a range of like six to $10,000. And this was the actual bottom in the bear market. This was not another bear market. Okay, looking at the trend. So realistically, this was just a freak scenario that we probably never see again in our lifetime. I don't think the public would buy COVID in the same way at all. Um, or some other virus that comes out and was gain of function research. But that said, we see our local bottom right here on the RSI. Okay. And we see a double bottom right here. But what are we seeing on the RSI right here? Okay. We're starting to see a bullish, what I like to call convergence. You can call it a divergent, doesn't really matter. Okay. We're seeing a series of higher lows on the RSI and a flat bottom right here, which leads me to believe that we are getting weaker on the downside sell pressure. So a break right here should seem and feel very good and natural for Bitcoin, which means that we could deviate from the past cycle. And when we actually break above $70,000, it's possible we rally back up to 80, 79, $86,000. Okay. Simply looking at the chart, anywhere in these ranges would be a pretty good range to potentially start looking for sales or taking profit. Or if you're not taking profit, right, maybe de-risking. And so if you're looking to take profit into stable coins or de-risk, you can still put those to work to earn yield. This is exactly what the banks have been fighting for so long with the Genius Act and now through the market structure bill. They don't want you earning fees because then you would get away completely from the legacy financial system and stick to DeFi or decentralized finance. Hence why we put the SGS blueprint together for you to help you get away from the legacy financial system before it collapses and take total control over your finances. Here's exactly how you do it.
If you have over $50,000 in crypto and you're waiting for the price to go up, you're already behind. Smart investors, they don't wait. They make their crypto pay rent. And while most people let their portfolio sit idle, certain DeFi protocols are paying 20% to 200% annually without trading, leverage, or the stress that's involved with holding through massive market volatility. And this is how serious money compounds in crypto. I explain the entire system in my short video, how it works, who it's for, and why almost nobody in retail ever learns this. So if you have 50K or more in crypto, watch it now by clicking the link below.
If you've been in, any pools, maybe creating a new range, right, for your pool with DeFi. So it really depends on your portfolio and your goals. But those are ranges that I'll be interested in if we can get back above that $70,000 to $71,000 range. So, but it's also likely that we could just see another little bull trap breakout right here to 72.8 or whatever, and then immediately sell back off, which means in this scenario right here, if we sell off, sometimes if you really have an opportunity and the market gives you time, okay, like let's say the market actually breaks out here. Okay. And then like comes up to 73 and then immediately comes right back down. And the daily close or the 4 hour close is somewhere at like 69 to 68. I would take a short there 100%. All the way down to this range here at 62 and watch it. Watch it closely. Does it continue to break down? Are we seeing weakness? Is it going to puke? Okay. And if not, and I start to see it bounce a little right here, then I'm probably just going to get out of that short position here with a small profit. And it might come back to the upside and I'll wait for it to break back down and then, really pile in the shorts. So it really, because the market can hang here for a while, but I think it's going to spend less time here than it did. Oh, I don't know what the heck happened there. Than it did over here on the first breakdown from November into February. Okay, because that's quite a while. I doubt we're going to do that this time around. Now, what I do like to see, and here's something that Armin mentioned earlier. He said, good to see that so far the markets aren't responding too negatively to the Iran attack. Matter of fact, I think this is like really great for you to start recognizing and seeing. The fact that you brought this up tells me that you're starting to develop more of the brain and the thought process of an actual trader and investor, someone who actually is profitable, because that is true. In a market environment like that where it actually would have affected the crypto market, we would have seen it on the charts. But the fact that we saw virtually nothing occur on the charts, we actually saw, I can't remember when it occurred, we saw like a positive price action on that day, leads me to believe that selling truly is done for a little while. And if that's the case, then you know what? At 70,000 we break out, we could potentially start rallying up to like 79 to $86,000, right? And by the way, if we start to range into this, play right here, and we're like, putting in a new higher low, and we come back into 90,000 at some point in time, guess what? This was the actual bear market bottom. We wouldn't know until way later, but not the point. Play it as it comes, which means you would still be buying really close to that bear market bottom. Now, is it a bear market bottom? My personal opinion, no. No. The stock market's still too close to all-time highs, and if the market breaks down further, that's where things get dangerous. So RSI is giving us a pretty good signal that this thing could be done for a little while, okay, to the downside. I still want to watch for a bear trap. Excuse me, a bull trap where we break out for a new range high and immediately come back down into the trading range that we've been in. You're going to want to be really cautious. Also, this is our first major breakdown, and arguably just we're starting to turn over on that 50-week simple moving average. So from that perspective, right, this is officially a bear market, and we'll see a lot of resistance that is overhead here. Also, right here on the 200-day EMA, you'll notice that this is the very first time this thing has also really turned over and is looking and printing a bearish move. So in both scenarios, from a weekly and a daily, okay, let me go ahead and just turn this off actually. Let's hide. You'll see that this right here is an indicator, right? Right around here where we went flat and started turning over on both, that this market is done on increased and expanded volume. Like this is still a bear market. Which leads me to believe we are in for lower lows. That is the higher odds. That is the higher likelihood. We're likely going lower. Okay. But we might actually see a retrace back into these ranges here. And notice how this guy right here is at 89.8, the 200-week moving average. Let's see if the market's respected it at all. And this is going to give you kind of a good reading and an indicator. So it doesn't look like we've ever retraced back up to it directly, which means it might be closer to maybe a 100-week or any other EMA. Let's look at it. And it looks like that 100 week seems to be a pretty good range resistance. So notice where the 100 week is at about 81. It's possible we could rally just to it or above again before breaking down further. Okay. So I would be laying on more shorts up here too, and far more than I would probably be down here because you're closer to a market bottom at 62 to 64 than you are at 81. And what's so beautiful about laying on a short right here at 81, 82, 83, whatever, is the fact that you're going to know pretty quickly if you're wrong and if this was a market bottom just by getting stopped out. That's it, right? So like if I take a short play right here and let's just say it's like 82, 83, whatever, okay? I don't know where it's going to go. If it just continues rallying against me up to 86, I lose so little money to be wrong here. And I'll just wait to see, does it play with that range? Is it bouncing and breaking back down? How's the market responding? Okay. What's the news cycle right now? Okay. So me personally, like it doesn't hurt to be wrong there. It's okay. Actually, it should never hurt to be wrong. And if it does, it's because you're playing with too much of your account. That's it on any one trade. You're over leveraged. Okay. It's okay to be wrong, but so the RSI is giving me a pretty good signal that we're ready to start moving back to the upside. Okay. From the EMA, SMA perspectives on the longer, time frames, it does not look like we're done with the bear market. And I'm seeing very similar signals in science to where we were right over here in 2022, where we actually from this range, let's just do the math here. Okay. We're somewhere right over here. Let's just assume we're like right here at like $30,800. If we're kind of correlated. This thing still dumped another 50%. So if we were to do that, right, and we've done the math here, it's I don't even know where we're at. It's got to be, well, we're actually right here. Yeah, we're pretty close to exactly where that is. Another 49% is down to $34,000, which is pretty wild. But that's very much possible. We've seen that just because there's accumulation of spot ETFs over a longer period of time, that does not stop the futures market and the derivatives market from leading the market into further or steeper sell-offs. So this is very much possible. Okay. A 42 to $34,000 Bitcoin does not seem like it's impossible or off the table by any means. So let's go ahead and so when is this going to happen? I'm not sure. Okay, but I know that it's probably going to happen sooner rather than later now. And we've covered over the last few weeks how, especially I was like, this market probably just needs more time, but we're starting to reach 27 days in. So like I think this week or next week we're going to see something occur with this range. And if not, then we're building a stronger base, and a stronger base never actually hurts for a few reasons. If we break above that stronger base, let's say this thing leads us into sometime in March or April, like end of March, early April. Then that longer, stronger base is going to provide a greater support when we rally above it. On the flip side, if you break down below it, it's going to provide a greater level of resistance. The less time we spend here, the less important this range is, the less the resistance or support. Okay. The longer the range, the stronger the breakout. So more often than not, that doesn't always remain true. There's nothing that is 100% true in markets, but it's just a good rule of thumb. Okay, it's kind of like another good rule of thumb, right? With a head and shoulders or a double top, double bottom. When you break below that neckline, right? It's like or above on an inverse. At the end of the day, more often than not, it goes 100%. But that's just a rule of thumb, right? You still have to watch it because what if it hits 90%? You're waiting for 100% of that move. It never hits, and you're starting to see weakness. Then get out. Get out. Like practice good discernment there. Okay, the market's going to tell you before any one of these little rules. That said, we are now. Here's another thing that you want to recognize, right? We're still in a range where there's been a lot of trade history. Just pulling up the VRVP, you can see that there's a lot of a cliff here, which means if we puke below here fast, it's going to be hard for us to get back above here for quite a while, which means it's likely not going to happen up until maybe October, November of next year that we're actually going to start trending back to the upside for a new bull market. Okay. We'll bottom sometime into the summer, realistically, if we're going to go lower. But this is going to be a lot of overhead resistance. Which means it's not, it's one of these things where if your time horizon, you're like, it's kind of like eating away at you because you're an investor. Okay. And now you've got to wait for Bitcoin to hit a new all-time high, XRP to hit a new all-time high, Ethereum, Solana, whatever, your favorite altcoin. Just know that it could take longer than you're wanting. And that level of impatience or the impatience that you might feel could cause you to make some bad decisions. And so you should never take positions or trade because you're impatient or waiting for the market or think, I just want to get in. Like, I think waiting for a range is far more important, waiting for the market to come to you. And in similar fashion, one of the best traders of all time, I can't remember, but it was in Market Wizards. His record in return was insane. Consistently, he said, I just wait for it to be like the market to be like, here's a pile of money. It's just sitting over there in the corner. All you need to do is go walk over and pick it up. In other words, I never try to force my hand in the market. I just wait for the money to be there and I take it. And in similar fashion, right? Like it's like playing these ranges. It's like waiting for a lower low. It's like, okay, now I'll start to really enter because I'm starting to see everything that I need to see. And we're teaching you that, right? We're giving you the right skills to look at it. But there is a lot of support here that could potentially become a lot of overhead resistance. So I guess to clean it up, to summarize, okay, we're seeing a few things. We're seeing expansionary volume to the downside. We've seen a breakdown in the overall trend. This is officially a bear market. If I counter trend trade, I don't want to sit on profits forever. I'm watching the key levels, or even if for whatever weird reason, this thing pumped to $77,000 and started showing signs of weakness and immediately started retracing back to 72, I'm out with virtually no profit, no harm, no foul. Save yourself, protect yourself. Okay. Realistically, I'd probably wait to see if it can get to 80, 79 to like $86,000. Okay. And in those scenarios, then you like I would say you reanalyze your portfolio, that position, and then make another decision. And that decision might be I'm going to exit my position and wait to see what occurs. Or I haven't been in the market and I'm gonna take a short now. Okay, I'm gonna start shorting the market. Where are you gonna set your stop loss? Those types of things. Um, I still think we're in a bear market. We're showing signs that this thing is ready to turn over and flip to the upside, realistically, somewhere into the $80,000 range. EMA, SMAs are very bearish. So when I get all those data points and signals, I still think we are bearish. I do, however, believe we're ready to rock and roll to the upside. There are a few plays that I've been looking at that I actually think are interesting. I think Solana is looking a bit stronger than Bitcoin. Currently, consistently, right, outperforming Bitcoin right now, anyways, to the upside. Also showing the exact same signals on the RSI. That does not mean this thing is ready to explode for new all-time highs. It just simply means we're retesting and playing with this $91 range quite a bit. We're seeing a lot of bullishness on the price action. We're continually testing the $88,000 or excuse me, 88 range. And if this thing, breaks to the upside, we're likely going to trade right back up to like, I don't know, at least $100, but maybe even 115 to 125 bucks. Okay. Which, when you're playing a Solana, it can be a lot of money. I'm also seeing plays like this. Now, here's an interesting one. Okay. Let me go ahead and pull up maybe the USDT pair right here. You'll see that the personality of this stock, right, crypto, is that when it bottoms, right, it hangs out for either a longer period of time, but more often than not, in the last scenario, a very short period of time before exploding to the upside. And we've had that scenario once, twice, three times. So when I see a crypto with a personality like this, I'm apt to take a small position. I also make sure that I manage my risk here well in the fact that I'm not trading the same size as I would on a Bitcoin, Ethereum, or even an XRP because all of those are far bigger by market cap. Although this one's sitting in the multiple billion range, liquidity for this is far smaller. So you want to play it smart. But you'll notice that we bottomed now into a range that we do have quite a bit of support, right? Going all the way back to 2024. So this is actually looking pretty hot for a play considering it's already doing what? Showing relative strength and breaking above the ranges that your Solana is or any other majors in the market cap. So look at this, right? Breakout for new local high, right? Off of a major range low. To me, that looks exciting. Okay. And so while everything else, like a Solana, might be rallying up to 100 to 115, maybe even 125, this guy could easily rally up to 12. We're talking at least, let's just do the math here. If you look at the resistance, right? At least an 82% move. Tracking that against, a Solana, if it did hit 115, let's just give it an average, and you bought the breakout at like 90K, you're looking at a 28, 29% move. So there's a lot more upside. But because of that, you have to remember there's also equal portion downside. So I play these types of things smaller than I do your majors. Okay. Let's go ahead and answer a few questions. Oh, and then the final thing I did want to cover. Okay. This is not a good signal. This likely, so I know it shows green. It's not supposed to be green. It should be red. This is green because it's bullish for the dollar, which means weakness for stocks, crypto, and your other assets. This is a crazy reading. Okay, ISM manufacturing prices are way, way up. In other words, our previous reading was 59, forecast was 60. We got 10 points above, which means, again, bullish for the dollar. Bullish for the dollar, however, increases inflationary pressures on the economy. So if inflation remains high or we get a greater reading on inflation, here, let's look at when that would occur. Where is it? Right here. On Wednesday, March 11th, right? We don't have a forecast yet, but if we come in hotter on inflation, even the next chair, what is it? Kevin Warsh, Fed chairman stepping in is likely going to be more hawkish. And so a hawkish Fed is not going to be positive for the markets, at least from the perspective of a leading indicator. Okay. Meaning, if I really try to simplify this, I'm trying to like break it down. So if you're like, you really don't follow, if inflation is higher, and it is currently just based on that one reading so far, okay, and inflation does actually show higher on March 11th. On which day? Wednesday, March 18th, the Fed might keep interest rates flat, which is fine because everyone expects that from our current Fed chairman, okay, Jerome Powell. But when Kevin Warsh steps in, if he also in May, if he also keeps interest rates flat at 3.75% because of inflation and is hawkish, which means he's not dovish, he's not being soft on inflation, lowering, the interest rate, creating more borrowing and demand and economic activity, then people are going to be pretty bearish about that. My personal gut tells me the market's going to view that as very bearish and they're going to likely want to sell all of their risk on assets. And when you sell your risk on asset, like a stock, like a crypto, you sell it for what? Dollars. So bullish dollar, bearish everything else. Okay. Bullish dollar and bonds, I should say. Um, and potentially even gold, again. So we'll see how that plays out. But I think, watching that Wednesday, March 11th reading is going to be really important. This right here is pretty bearish I mean, this is an insane reading to the upside. So 10 extra points above expectations is wild. So that also leads me to believe that we're likely just retracing to the upside for a new lower high in a bear market. That is the analysis for the day. Let's answer a question or two. It's already 5. What can you make on a short with 500 to 1,000? And what class is best to learn more about it? I've done TA, maybe refresh needed, but want to play in this. I think just play. If 500 to $1,000 is all you want to play with, practice risk management like I showed you here. It's less about making $1,000 on $1,000. That's 100% return, and more about being consistent in making, your money, and cutting your losses quickly. So in the same way that I just showed you losing a 5% or 7% on a move, you should only be trading on $1,000, with $100 to $200 max at a time, right? Max. If this isn't money you care to lose, that's fine, but you're still probably not developing the right disciplines. For me to tell you, what you can make on a short, I don't know. I think it depends. There's too many variables, right? There's just way too many variables in markets. That's why I teach you what I teach you here. And the only way that you're actually gonna do any like get good is by practicing. But let's see here. I've done TA, maybe refresh needed. Yeah, I just there's no way. That's Tom. I apologize. There's no way I can answer that question or help you further right now. If we trade in the 1, 5, 15-minute range, how many times do we look at the HHHL for long L? Okay. If there's a number of candles or a certain sign you look for, I say get good at the higher time frames, Philip. If I think a lot of people try to become day traders too soon. And if you can't even make money on a daily time frame, you're definitely not going to make it on the 1, 5, 15 minute. I say stay on the 4 hour and up and make decisions once, twice, 3 times weekly and see if you can be consistent there. I genuinely mean I think that'll make you a better trader. Then start to zoom in, because to answer your question of looking for, I mean, it's kind of like if your eyes aren't tuned for the greater picture, right? Like, how could I expect you to be a professional by looking at all the details, right? You don't like, to me, that makes no sense. So just get good at the higher time frames first. Is that mantle, MNT? I do believe it is mantle. I don't even look anymore, guys. I just click through and I find something that looks good. See, when I see this stuff, it doesn't look good to trade. It's just already oversold. It looks nasty. There's too much sell pressure. Could you make money on a short? Sure. But I'm looking for things that are either showing relative strength to the market or look like they're at really key points of support that are now starting to break for new range highs. And so every now and then I find them. I try to share them here and there, but there's just too many to look at, and most look like this. Okay, this is your altcoin market. And so, how do we know that? I mean, it's pretty straightforward. Let's go to this guy. Let's look at Bitcoin dominance, pretty consistently sitting at 59 to 60%. And it has remained there since September of 2022. It's just consistently trended to the upside and remained in this range now. So to me, like you got to look at Bitcoin, you've got to look at the greater market and then zoom in. And if a crypto looks let's just randomly click on some, random infrastructure token like this. That's just not, I don't even look at it. I don't even trade it. And again, you only develop that by looking at enough charts. Um, okay, does H bar look like it has any strength? Last time I looked, probably not. I can look at it again. There's so many coins that are being delisted too. It's funny. Let's go ahead and look at H bar. I believe H bar is actually on Coinbase with a lot of history. So let me go ahead and do that. Decent amount of history. Okay. But not all of it. Let me do this real quick. Oops. Ugh, did not mean to do that. Let's go to H bar USDT. We'll do that one. And I do believe this one will have a lot. There we are. Right. So pretty straightforward. I look at the 2021 high, all-time high, 57 cents. Okay. In 2024 and in 2025, January, kind of when XRP was pumping, this was kind of the same trade. This thing rallied for a new lower high at 40 cents. XRP was putting in a prior all-time high and then a new all-time high. This guy is relatively weaker. It's also showing just relative weakness across the board. If I were to track it, right, it outperformed XRP probably for a short while, but now it's really severely underperforming even XRP, and XRP is underperforming other cryptos and tokens. And that's just how the market works. So that set, at least currently, right, at one point, anything can outperform something else, right? Especially if it's low liquidity and some guy or market maker pushes the price up by buying a lot. That doesn't necessarily mean it's relatively strong. Looking at an H bar, this is relatively weak across the board, especially if we were looking at 2021 high to present. Does that mean in the next cycle there can't be a new narrative, a new adoption, new whatever technology they implement, and bang, it goes for a new all-time high? Sure, but already I'm writing this one off, just based on how it performed this cycle. So there's your answer for H bar. Uh, okay, I think we're pretty good. I don't have any other questions to answer here. But yeah, to help you, Tom, I really do believe you just got to practice. How much can you make? Don't worry about what you can make right now. Worry about how much you're losing on each trade, and eventually you'll make some money and get more confident and comfortable on a chart and in the market. So, thanks so much for watching, guys. I appreciate your time, and we will see you next week on Tuesday. Have a great one.